Happy Wednesday, everybody. The Ryan Grubbs Mortgage Team here with your midweek market update report. So real quick, let's go ahead and get into some economic announcements. Why are these important? Economic announcements are what dictates what our bond traders are doing and how that's impacting our mortgage rates. So we got some old news coming out. We're getting this old news because the government was shut down. So the old news is from December, not really relevant, but I want to go ahead and share it with you because, it is important to know what's happening out there. So we got construction spending coming out showing that was down 6% in the month of December, okay? So that's not really good news. But we did get some good news in showing that December new home sales were up 621,000, blowing away expectations, which is great news for our economy in the month of December. Now, big thing that we got announced on Tuesday was the announcement at 2 o'clock in regards to our federal budget, showing that our Treasury budget gap has widened by an amount of 77% over the past 4 months. Now, that is a concern to our bond traders, considering we already hit our federal deficit in the month of March. So, big concern there. We saw mortgage-backed securities jump up a little bit off that reading. So, also, other than that, we have not had any progress in regards to U.S.-China trade talks. Why is that important? Because what happens with us in regards to our international relationships between U.S. and China, two of the biggest economies, is going to be a big impact in regards to what happens with our mortgage-backed securities. Because if they can't come to an agreement and these tariffs stay in place, that is going to cause a friction in regards to our relationship with China. Again, big trade partners, two of the biggest economies in the world. So let's take a quick look here and let's see what's happening with our mortgage-backed security pricing. As we've talked about before, the higher our mortgage-backed security pricing, the better our interest rates. The lower our mortgage-backed security pricing, the worse our interest rates get, meaning interest rates are moving up. So as we talked about last week, mortgage-backed securities in the month of February stayed in a great trading channel. We traded between a 102 to 102.2 range. And as you can see, that pretty much consisted all of February. Now we get into March. In the month of March, we've dropped below that 102 level. We're starting to set into a new trading channel, which is lower in regards to mortgage-backed security pricing. Like we said just a second ago, the lower the pricing means higher interest rates. So we're going to want to kind of pay attention to that as we move forward in the month of March, watching some of our economic announcements. But that's it for this week's midweek market update report. Make sure to go on, like the Ryan Grubbs Mortgage Team's Facebook and YouTube channels. We'll see you back next week.